Hello, everyone, and thank you for joining us today for a coffee and to discuss taking the fright out of year-end budgeting and planning. My name is Thomas Ironstone, and I'm the Manager of Corporate Performance Management and Business Intelligence at Corporate Renaissance Group and IDU North America. I'm also joined by my colleague, Kevin Phillips, the CEO of today, and we look forward to walking through how IDU can streamline your year-end and year-round processes. Just a few housekeeping items before we get started. Today's presentation is being recorded. We'll send the recordings and the slides to all attendees this week so you can share and rewatch. We also want your questions, and we'll have a good 15 to 20 minutes set aside for your questions at the end of the session. So please type them into the GoToWebinar panel. And at the end of the session, we'll be sending our $5 coffee gift cards to those who have attended live. Please keep an eye out on your inbox for this after the webinar. A little bit about Corporate Renaissance Group. We've been around since 1989. We are a Microsoft Gold certified partner. We have over 4,000 customers worldwide in our various global business groups. Our goal is to help organizations transform the way they manage their ERPs, their FP&A processes, business intelligence, talent management, and much more. Our team is composed of a highly skilled group ranging with finance, technical, and system expertise. With IDU, we've partnered together to be able to deliver top line delivery of FP&A and reporting services. IDU has been around since 1997. It's also a Microsoft Gold certified partner. IDU has been recognized by Gartner as a top 10 corporate planning application on the Gartner Market Guide. IDU has also been recognized by G2 Crowd as a high performer in CPM category. With over 340 customers globally, with 33,500 users. And these customers range across all industries. And Kevin will talk to you a little bit about the flexibility across different segments. This platform specializes in budgeting, forecasting, and management reporting. So what's so frightening about the year end and the budgeting cycle? There are many reasons why finance teams might feel like they're fearful once they're approaching this process. And the reasons that we're hearing from our clients is that there's not enough insight into the actual data. So they might be relying on spreadsheets, data dumps, and there's all sorts of issues with if it's up to date, whether there's been logic applied to it manually in Excel, all sorts of issues. And also when we're going through this process, there's lots of manual effort that's required to prepare it. So the finance teams are working around the clock, around the budget cycle to dump the data, prepare these spreadsheets, give this out to individuals. Individuals might have questions on getting historical actuals so they can properly prepare their budgets. And it's just so time consuming. And then once they collect everything, it just takes forever to compile it. And once the questions have ended and they've prepared the budget and we get into the actual month-over-month reporting, people are asking, where's the variance coming from? And being able to ask and answer those questions in a timely fashion is so painful. And people hate getting those questions because they don't have the data to actually support it. In addition to that, many organizations, small or large, can have very complex business processes and structures. And so this can create a lot of challenges when actually developing the budget, managing it, and going through your budget cycle. And so being able to manage that in Excel can be quite cumbersome and create errors and also be very difficult for the finance team to manage. And with that goes hand in hand with data accuracy. So as we all know, once the budget's prepared, presenting to senior management, presenting to the board, if things are inaccurate, you can lose the room very, very quickly. So being able to have something structured to be able to help address those data inaccuracies can go a long way. So time for a quick poll. So let's launch it and we'll get your feedback. So the questions will be around which of these common year-end complaints are felt at your company? Too many manual steps, software is too difficult to use, lack of department accountability, the Excel pass around, too many cooks in the kitchen, or just really all of the above. All right. So it looks like it's a split really between too many manual steps and lack of departmental accountability. This rings true with many organizations, and we'll actually go through that in a bit. And Kevin will discuss how IDU can actually help alleviate those needs. But don't worry, folks, you're not alone with those challenges. And in addition to those challenges, I'm sure they're quite amplified in the current state of affairs globally. So this year's made it way more complicated. Obviously, lack of technology in the whole work from home situation where folks are not at the office, they're not easily accessible. The old Excel process, being able to manage a complex budgeting process, compiling data, going through all the reporting, can be much more difficult to collaborate. So not having that technology can create all sorts of challenges in this process. Obviously, as well, if we're working in that manual world, not being able to properly track those changes and having version control and things of that nature can create all sorts of headaches. Understanding what is the latest budget when we're going back to Excel spreadsheets and trying to track things down. Also, the lack of clarity and modeling for the upcoming year. So without a lot of structure, working within Excel, trying to build out your budget models, you're working across multiple department managers, lack of accountability, this can create so much challenge for the FP&A team. And then obviously changes to team structures as things are evolving, different roll-ups and accountability. This is providing all sorts of additional challenges for organizations globally. So how can we leverage technology for the FP&A process to address some of these challenges? So as we know, there's a largely based manual spreadsheet approach leaves little time for analysis. The FP&A team is spending so much time on administering the budget, collecting spreadsheets, sending these out, and it's a non-value added process, which creates a lot of headaches within the finance function. Also, given this year, and I'm sure just normally, is that the budget contributors are unclear of the budgeting cycle, what's required of them, the milestones, and this is just an ongoing headache. Contributors also having access issues to the latest budgets and forecasts. So again, if you're working Excel, things are being sent around in email. This creates all sorts of headaches for the end users, the business leaders that need that data, need to be able to get this timely. We don't want them to have access issues. Also, when they're preparing their budgets, sometimes it's not meaningful enough to just input a dollar value. Sometimes they want to understand the underlying drivers. They want to input volume and rates. So a simple example on the revenue side, number of widgets sold by a certain price. Simple things like that, being able to break it down into the actual underlying drivers can allow the different managers to be more accountable for the budget because they understand the underlying drivers. So understanding, is the variance coming from volume or is it coming from price, just as a simple example. Slow turnaround on revisions, especially now as we're going through the budget cycle, but also reforecasts. Sending around spreadsheets, getting inputs can be very challenging. And Kevin will go through some discussion around how IDU can help address that as well. And then finally, synchronizing with your accounting system. I'm sure this year many accounts have probably been added for whether it's COVID-related initiatives, things of that nature, new accounts for work from home related expenses, whatever it might be. Not having a synchronization to your accounting system can cause a lot of issues because your old spreadsheets become quickly out of sync. Updating them manually can be a big headache. And then finally, when it gets to the presentation phase, being able to compile everything, present it to the board, whether it's quarterly, annually, or even monthly, as the data is being updated for your budgets, for your forecasts, importing actuals, all of this needs to be in sync. All right, with all that being said, I'm going to hand it over to my colleague, Kevin, who's going to take you through IDU and how we can overcome some of these challenges.
Hi, good morning, good afternoon, good evening, depending where you are in the world. I've taken a slightly different approach today. Instead of sort of killing you with lots of screenshots of what the system looks like, I thought I'd take a more altruistic view of budgeting and the finance department. since we are in the scary time of the year. In America, a bit more scary than others, I think. But what I'd like to do is just look at the taking the fear out of the finance department and looking specifically at a half dozen key areas. How do you measure a successful budget? What makes a successful budget? How do you control your processes? And what is the functionality that enables those processes? And what about period end closing, forecasting, and then modeling? Well, we think modeling is easy, but it's probably something which scares a lot of people. So let's have a look and see how those things fit together. So first up, how do you measure budget success? As a bean counter myself, was I close? Were the actuals close to the budget that I prepared? How long did it take me to compile? Are the numbers in line with last year, and are the numbers going the right way? Those are typical measures of how well we think we've done the budget, when the budget is left to us to do. But probably the most important one is, did the board approve it? And was it first time, or did it go back to the board half a dozen times, including a lot of reworks and changes? So how do you measure your budget success? To me, budget success actually starts way before that. And to me, the fundamental elements of success is really all about enablement at a department level. What does that really mean? Well, there we're talking about collaboration. Effectively, collaboration is the root cause of making a budget successful. What do I mean by collaboration? It's not about the accountants talking to each other. It's not about the directors talking to the accountants. It's really all about empowerment. So what's empowerment? Empowerment is not some racial thing. Certainly, I'm sitting in South Africa at the moment, it's always very pertinent, but it's not about that. Empowerment is all about making individuals who have responsibility, who are in a position of responsibility in an organization, for a department, for a cost center, for a profit center, giving them a sense of feeling that they are important, that their voice matters, that the numbers that they put together count, and that they're important. How does that translate? That translates into ownership. Because when individuals feel that sense of empowerment, they start to feel a sense of ownership around their numbers. Now, if you've got ownership of numbers, you've got a lot more buy-in to the budget process. People feel more involved. They feel more ownership of their budget. Why is that important? It's important because if you've got ownership, you then get accountability almost by default. Why don't you get accountability by default? Because when someone prepares a budget and they own that budget, 6 months later, when you're looking at the actuals, it's no longer a throw your hands in the air, finance did that budget, not my problem. It now very much is your problem. The responsibility vests at the lowest level in the organization. It vests with the people at the coalface, the people who did the budget, because they know what's happening in their little environment, wherever it is. If it's in Alaska or Mexico, doesn't matter. They know better than someone sitting at head office in Los Angeles or New York. Let them get involved. Let them take ownership. And through that comes accountability. And with all of that, that's all cloaked in a sense of transparency. The transparency is visibility around the numbers, letting people who are not accountants see what's going on in their departments. You'd be amazed at the number of departmental managers who buy into the concept once they feel that sense of empowerment and that sense of ownership. The number of departmental managers who really take a far greater interest in how their department is doing once they feel that sense of ownership. So if you want a budget to be successful, to me, it really comes down to the first comment on the previous slide, which was how close is your actual to your budget? And it's only ever going to be close if the people who ultimately spend the money and are ultimately responsible for generating the money are the people who do the budget and take ownership of that budget. So talking about taking ownership, you need to control your budgeting process. Now, controlling your budgeting process is, once again, a myriad of different things. I mean, obviously, my business is very involved with budgeting processes, budgeting environments, looking at how big companies, small companies do their budgets, get involved, and how can we make that task easier for them. And really, we see all sorts of things, from paper-based budgeting to Excel spreadsheets. And I've said already, I'm a bean counter, I'm an accountant. I love Excel just as much as the next accountant. The problem with Excel, which I recognize, and which most people ultimately come to realize, is that it is a great tool for doing quick calculations, for doing quick projections. But is it a tool that you can roll out to 20, 40, 60, 100, 150, 200 people and get them all to give you input on the same spreadsheet? Does that same spreadsheet work for every individual, every business sector within your greater business? And that's when people start to realize that Excel is not necessarily the right tool. So if you want to manage or get control of your budgeting process, you need to actually have the right tools in place. And quite honestly, in today's day and age, and I think COVID, if nothing else, has shown us the importance of having a web-based budgeting platform. Web-based budgeting is hugely important. People have access anywhere, anytime. You don't have to be in the office. You don't have to have face-to-face meetings. The technologies that have evolved through this pandemic have fast-tracked our ability to interact and do business remotely. And certainly trying to do everything on Excel, sitting side by side, or arranging meetings with your regional managers to go through the budget that you've prepared for them doesn't really work so well in the current environment. What's next? You need to be able to look at the raw data and add it up in a number of different ways. What does a number of different ways mean? A number of different ways means that you want to be able to look at those figures based on the manufacturing profit and loss, or on the financial profit and loss, or on how the auditors look at it. You want to be able to sum your data by division, by region, by type of business, by business unit. So you want to be able to take that raw data at the lowest level and accumulate it in multiple different ways, but you don't want to be going and doing that manually. That needs to be automatic. You need to have online real-time aggregation of your budgets. You need to see what that budget is right now. You need to see how that budget aggregates. You need to see and take action when the budgets are not looking the way they should. But not just the accountants. A regional manager should be able to see what the cost centers of departments within his region are doing and budgeting. Not once the accountants have got all the information, added all the information up and given it back to him. He should be able to see as the guys are capturing their budgets, so that he can immediately pick up the phone and phone his departmental manager and say, listen, that's never going to fly. Let's talk about it. Let's work out, why do you want that number? If you can do it proactively, online real time, your budget cycle becomes a thing of beauty. It becomes a thing that should be getting done in days or weeks, not months or quarters. It should be getting done really, really fast. And furthermore, taking that same concept to the next level, when you come to do a forecast, it should literally be completed in days. It shouldn't be any more than that, because everything should be available online real time. Much of the data could be collated or pre-populated, and it's then a question of reviewing the information and signing off the information rather than trying to create the information and aggregate it. But once again, that can be done at the grassroots level because it's online, it's real time, and it's sitting on the web. So it doesn't have to be done or taken offline by the accountants. Security and access control. One of the funny things, whenever you talk to a business about control or access or who's the administrator, IT always put up their hands. But budgeting is a finance function. Reporting, financial reporting, month end is a finance function. Forecasting is a finance function. Financial modeling is a finance function. Therefore, finance should be the people who decide how it works, when it works, who needs to do what, and why they need to do it. So we firmly believe that security and access control really needs to be done by the system administrator, who should be in finance. So that's about taking control of your budgeting process. But I think Tom actually mentioned it. You need to have a variety of different tools to be able to meet your requirements. So at IDU, we focused very firmly on what we do. We've stuck to our knitting. We've focused on budgeting and reporting and forecasting. It's what we do. It's what we know well. But what you really need to do is make sure that you've got all the budget types that will cater for a retail organization, a manufacturing organization, a financial services business, an engineering business, a lawyer, whatever. And that comes from functionality. So any tool set that you're going to use shouldn't just add A plus B. It shouldn't just be able to do a widget calculation, put in the number of widgets and calculate the value. You need to be able to do more than that. You need to be able to do your remuneration budgeting. It's always a very big cost. How accurately can you do it? Percentage allocations, grade budgeting, all that stuff. Everything that you see on there should be part of a standard system. So reporting and forecasting or period close. So where do we start to play in there? Once again, it needs to be as automated as you possibly can. The more manual stuff you've got to do at month end or at year end, the longer it's going to take you to do, the higher the risk of error, and the more it needs to be checked and rechecked. It again should be done at a departmental level. Now, again, when I make a comment like that, most accountants raise their eyebrows and say, I'm sorry, we're talking about month end here. We're talking about year end. That's an accounting function. That's an accounting job. That's not something that we want a departmental manager to do who doesn't know a debit from a credit. Agreed. But that departmental manager does know what's happening in his department, 5,000 miles from where you're sitting. You do need his input. He's the person who needs to explain why his actuals and his budget are so different. He's the guy who can tell you at a glance in his department what transactions look wrong because he's not aware of them. Finance trying to review 1,000, 2,000, 10,000 transactions across a business in a week to get month end out the way is never going to be effective or efficient. But if you take those 5,000, 10,000 transactions, split them up across the 100 cost centers that you've got, all of a sudden one person's looking at 100 transactions to try and see what's possibly incorrect. And they can then identify those issues. And they can start to raise things like records and accruals. They don't obviously create those entries because they don't know how to do it. But if they can identify the anomalies and finance can focus on the anomalies that rather than trying to review every single transaction, that is where you get massive savings. We had one client where we put this in for them, huge retail company, I think they've got about 1,000, 1,200 branches. Their month-end process dropped from 5 days to 3 days. The month this went live. Not 3 months later once people, the month that went live. Why? Because all of a sudden they had 400, 500, 600 managers reviewing the numbers and cherry picking the things which they thought were wrong. And it was those cherry picked items finance had to focus on rather than trying to focus on everything. Online real time, once again, it's got to be as quick and effective as possible. You need to be able to make changes, you need to refresh your data, people need to see the change, the adjusted figures, and they need to make decisions. So once again, online real time, making the process fast, vitally important. I mentioned earlier, forecasting is something which is days. If a forecast is taking you weeks or heaven forbid, months, there is a huge problem because that's not what you're looking for. Look at this current year that we're in. People need to forecast. They need to be able to revise their forecast. They need to do it on a ticky because every day there's something different. Every day there's a new challenge. Every day the COVID numbers go up, they go down. There's masses of changes. People can't say, right, we've got these changes, let's do a forecast, that'll take us 6 weeks. And then we'll see what, in 6 weeks' time, all the parameters, the drivers, the fundamental assumptions that you made have changed. You've got to be able to forecast in days or hours even. And once again, you need to do that at the grassroots level because they're the people who know what's happening. And if you don't, they won't take ownership of it. But in an online real-time environment, that becomes mute because they can, they do, and it happens. You need to be able to do run rate calculations. You need to be able to extrapolate from where you are, assuming things aren't going to change. A little bit sensitive on time, so let's talk about financial modeling. I said easy. Well, We think financial modeling is easy. Why do we think it's easy? Well, let me take you through the process and then I'll touch on a couple of points. The first thing that you start off is a set of data. If you want to model anything, you need some data. So what is that data? Last year's actuals, the year before, this year to date, this year's budget, next year's budget, whatever it is, you need a set of data. The next thing you need to do is you need to define assumptions. So let's think about that. What are the things that are pivotal to your business? What are the things that are going to impact your business, your numbers, your expenses, and your revenues? What are those things? And can we reduce them to assumptions that we can say, if this goes up by X%, what does it do to my business? Great, we can do that. Then we need to take it a step further and say, okay, well, you know what? It's not just a question of saying, what if inflation is 5% next year? It's a question of saying, what if inflation is 5%, but in a worst case scenario, it's 8%, and in a good case scenario, it's only 1%. That gives me 3 different scenarios based on one assumption. And it drastically creates an environment where I've got multiple possible outputs. What we then do is we link those assumptions, those scenarios to the data, link it into the accounts. Any account can have as many assumptions linked to it as you want, because you're only going to pick the assumptions that actually impact that account. Once you've done that, you get the big calculator out and it goes and grinds its way through the numbers. It takes your base set of data, adjusts it for the assumptions by the different scenarios, and it gives you results, which you review. Very seldom will your first financial model with your first set of assumptions and your first set of scenarios result in the perfect financial model that everyone's happy with. It'll probably highlight some anomalies and some concerning points, in which case what you do is you do what we call a rinse and repeat. What's rinse and repeat? Well, what it means is you go back to the assumptions, you go back to the scenarios, you look at the links of the accounts. Do those assumptions actually impact those accounts? Have I missed an assumption which impacts on an account? Or have I got an assumption linked to an account that shouldn't actually be there? That is financial modeling in its simplest form. And obviously, it's a cyclical thing because you can do it and do it and do it and rinse and repeat as many times as you want until you end up with a number of scenarios that actually make sense to your business and you feel comfortable with. So let me just summarize that very quickly. The first thing you do in financial data is all that stuff I said about all the functionality and requiring detailed budgeting functionality. You know what? In financial modeling, you don't need that. You need data. You need to know a value per account, per cost center, per month. That's what you're going to extrapolate. That's what you're going to calculate. That's what you're going to apply percentages to. It's far, far more difficult and in fact almost unwieldy to try and apply assumptions to all the possible components in activities or remuneration calculations, etc. So when you do financial modeling, it is an estimate. It is a model. Start with base data, start with flattened data, and extrapolate that out. You need to have multiple assumptions, and you need to define what all those assumptions could be that are pertinent to your business. You can create as many as you want, but ideally focus on the ones which are core to your business. What is inflation, salary increases, increase in sales volumes, etc. And then link those to the accounts. As I said, you can have many assumptions linked to one account, or just one assumption linked to one account. That's up to you. Create those various scenarios because you do want to have a good, a bad, and an ugly version of what's going to happen next year. Rinse and repeat again. You're never going to get it right first time. You're always going to get it. You're always going to have areas which you can improve on, additional assumptions you can make and you can add into the model, and you can link to different accounts. Predictive analytics, a very interesting one. We brought it into our system. Predictive analytics, although I do have to question the veracity of predictive analytics given what's happened. Okay, no one foresaw it. There was no predictive analytics that foresaw this pandemic hitting the world and the world economics the way that it has. But what it has done is it's put a huge hole in your data, because you can't really take the last 15 months worth of transactional data and extrapolate it forward and think that that is going to be a reasonable reflection of what you're going to have in the next 15 months. It's not. So you're going to have to try and work out how you can exclude this lockdown, this COVID period, because it's obviously going to be having a huge impact on your numbers. In most cases, disastrously bad, in some phenomenally great. But it's not a normalized impact on your results. It's not something which is going to repeat itself. Therefore, almost by definition, it can't really be used in predictive analytics. And last but not least, top-down budgeting. The way we see budgeting is that you can use a modeling tool set. You can use a modeling tool set, which is not necessarily used by everybody in the business. It can be used by the finance team to get a good feel for what should be happening. You can use that to build your top-down budget. You can export it and create it as a budget set for next year. But it can be a top-down budget. So it's a question of saying, guys, here's the budget that we've created from our financial model. Now go do us a zero-based budget coming up the other way. And these are the figures that we expect you to be coming close to. And then you can easily review where there are massive differences and big variances. And as I mentioned earlier, our tool set, everybody has to do a budget. If you want a new car next year, you need to do a budget. Whether you're in engineering, whether you're a lawyer, whether you're in education, communications, retail, if you want to buy that car next year, you need to put money aside, and you do put money aside by doing a budget. It doesn't matter. The functionality employed by the budgeting tool set that you use should be diverse enough that the same tool can apply to all these different industries. And that's where we're particularly strong. And that was my 20 minutes in the sun.
Excellent. Excellent. Thank you, Kevin. That was fantastic. Looks like some questions are already rolling in, so I'll throw them your way. First one's sort of interesting. What is the biggest hurdle getting organizational buy-in for a platform like idu?
I think normally the finance team can see the need for it, and the executive management can also see a need for it. So yeah, you do have a challenge with the executive, with corporate buy-in down to the grassroots level. However, and I did mention it when I did the presentation, what is really interesting is the quantity of managers at the grassroots level who, if you give them an income statement for their little bit of the business and give them that sense of empowerment and ownership of their bit of the business, the impact on their buy-in to the business as a whole, the impact of them taking a really, really big interest is phenomenal. So it becomes self-fulfilling in many respects. Yes, you do possibly need to sell it a little bit to get them to see the benefit of it, but the tool set that you're using, like idu, should be designed for the non-financial manager, not the accountants, because you need to get those people involved and empowered and invested in the system. So our system is designed for that, and that does help buy-in. So we've got a number of clients where we've got literally hundreds and hundreds of users, and it works. What more can I say?
Excellent. And it looks like there's sort of a similar question, and I think you've already addressed it a few times, but I'll let you answer it. The question is, we've had challenges implementing a distributed budgeting process where managers are preparing their own budgets in Excel. Has idu helped companies with similar challenges overcome this?
Yeah, look, as I said before, as a bean counter myself, I love Excel. Excel's strength is its diversity. Its strength is the way you can build all sorts of scenarios, all sorts of formulas, and some really cool, fancy Excel spreadsheets with some wonderful formulas. It's great. But in that strength is Excel's biggest weakness, because everybody can build their own formulas. Everybody can take that raw spreadsheet and manipulate it. And before you know where you are, you haven't got a single version of the truth. You've got 99 versions of the truth, and you don't know where the differences are. You got an error in a formula in one spreadsheet, but not in another. How did that happen? And that's why Excel is so dangerous when you get to a larger environment. It has its place. I'll put my hand up. I use Excel every day of my life. excluding Saturdays when I play golf. Or maybe I should use that to calculate my golf, my scorecard sometimes. But anyway, that's another story. But yeah, I mean, I use Excel all the time, and I'm passionate about it, and I love it. But do I want 80 people to try and complete a spreadsheet and then me to try and consolidate that into one place? Really not going to happen. Having said that, we do have clients where, particularly in financial services, actuaries, they love their spreadsheets as well, and they'll produce these massive mortality calculations and provisions for claims that's going to happen or not happen, or deaths which will happen or not happen. I wonder how they've done in the pandemic, but anyway, there's one person who's got this massive spreadsheet and it produces one number for the accounts. We're not going to try and replicate that spreadsheet. We're going to say, take the one number, put it into our account as a standard account, just put the value in. Take your spreadsheet and add it into our system as an attachment. So 6 months later, if we want to see where that one number came from, we can pull up your spreadsheet because it's saved in the database. So we create that audit trail, if you like, of where do the numbers come from. We don't recommend it for everything, but there's always going to be situations where
All right. Sort of interesting. I'm sure others would benefit from hearing this as well. Is it possible to implement basic modules first, like cost center planning, and grow into other areas later, such as detailed revenue plans?
Definitely. The way we're structured is, we actually have a lighter standard enterprise version. So if your requirements fall into the functionality in light, then you don't need to license standard or enterprise. You can grow into those. When we sell our system, we actually normally recommend our clients, even if they do want some of the more complex functionality, by all means license the whole product, but don't try and get a client to use every piece of functionality in the system on day one, because then you are going to get serious kickback and resistance from your users, because now you're throwing far too much at them in one hit. Rather, decide this is where we want to get to, and over the next 2 years we're going to get there. But in phase one, we're just going to do very simple budgeting. Phase two, we'll add another level of complexity, and as you add the layers of complexity, the users adopt and adapt to them quite easily. The other thing that we often recommend, and we find works very well, is to actually use a reporting module first. Why? Because the reporting module is really easy to use. There's nothing to capture. It's a review, it's capture comments, explain variances type thing. There's no numbers that they have to capture. Once users start using that, they get used to the system. They get used to the look and feel, they get used to the way it fits together and the way it works. The next step for them then is to do a budget. When you throw a budget at them, hey, you know what? I'm used to the system already. I feel comfortable in this environment. So therefore, again, you're simply adding that complexity one piece at a time until the users are completely conversant in all the complexity of the system. It's certainly a very powerful system. It can do pretty much anything that you would require it to do. But again, I would strongly recommend you don't try and fly to the moon before your plane's taken off on the runway.
Well answered. Another question just came in. It says, we have two companies that use two different ERP systems, Microsoft Dynamics and Sage 300. Can IDU integrate with both?
Yes, we have clients who use, I think we said on top about 38 different ERPs. We're particularly strong on Sage, as well as the Microsoft stack, but we also have clients running SAP, Oracle, JD Edwards, you name it. One of the beautiful things about IDU is that we use a tool called SSIS, which is part of Microsoft's SQL Server, which is a pretty standard database and pretty standard technology. We use that to actually talk to the underlying ERP systems, the Sage 300, the Dynamics. And then we pull the data into our system. Now in IDU, we have what I mentioned earlier in terms of hierarchies or different ways of reporting data. They're called hierarchies. And what we can do is we can create a corporate hierarchy with a chart of accounts. And then we can link into that standard hierarchy Dynamics accounts and Sage 300 accounts. And you know what? If you walk out tomorrow and you go buy a new company, a new subsidiary company for the group, and it's running, I don't know, Sage Intact, boom. You write the interface, you bring it in. 2 days later, their data is now reporting as part of your standard management pack, and they can produce their own data for their own management team using your standard management pack as well. So yes, integration with ERP is not a problem. The nice benefit is that we actually aggregate all the data almost seamlessly into IDU. So as a user looking at IDU, you don't see dynamics, you don't see Sage 300, you just see your financial numbers.
Excellent. A couple more questions remaining. Also a very interesting one. What are typical key success factors for ensuring a successful implementation?
I think that the most fundamental success factor is having somebody on the client side that buys into the process, buys into the system, takes ownership of the system. So I've talked a lot about ownership. I'm not talking about the departmental manager now. I'm talking about that person in finance who is going to be the administrator, the owner of IDU in the organization. Because if that person adapts to IDU, adopts IDU, and understands IDU, it'll always be a success. It's when they're not that interested or they've been told they're going to learn this new system and they never really bought into it in the first place. You're always going to be behind the 8 ball and you're going to be struggling. But to try to get that person bought into the process, bought into the system, and seeing the benefits they're going to get and come out of it. One of the big things with IDU is we like to set ourselves up, or we always position ourselves as we get involved in the implementation. But a big part of our implementation is transferring knowledge to the administrators so that when we walk off site, you should be able to run the system yourself. You shouldn't phone us up and say, I need a new hierarchy. You should be able to create it yourself. You shouldn't phone us up and say, I want to set up a new type of account. You should be able to do it yourself. We have got training videos built into the system. We've got good help in the system, but our training to you is part of the implementation. So again, if we can pass that information on to you, you should be completely self-sufficient and standalone. Now, clients who don't want to be standalone are few and far between. Normally government organizations in the African context, but everybody else wants to have ownership themselves. They don't want consultants living on site doing everything for them. IDU is a huge empowerer in that perspective. But to come back to your question, what's the biggest risk factor? The biggest risk factor is failure of the company who's licensed IDU to have an administrator that buys into the process and buys into the system. That is the single biggest risk factor.
Well said. And the last question that we have from the group today, and it's fairly fitting given the current state of affairs in the world, are you able to implement remotely? How does that work?
Yes, we can definitely. Look, the world has moved forward. We could implement remotely before this all happened, but most clients wanted to see a face. They wanted people on site. You don't need to be on site. We've implemented in New Zealand from South Africa. We've implemented in Canada from South Africa. We don't have to be there to do it. So yeah, it's as long as you've got good infrastructure and understand, like when you're dealing up into the nether parts of Africa, that can be a bit of a challenge. So you don't take that for granted. But in America, you've got really good infrastructure, so the communication is pretty fast and pretty reliable. So yeah, implementing remotely is not an issue. We often do our training remotely via Zoom sessions or team sessions. And in some ways it's better because, if you're on site, then what tends to happen is people tend to throw like 8 people in a room and people are fiddling on their cell phones and some guys aren't listening and some guys are scared to put their hand up and ask questions. Whereas when you're doing a Zoom session or a team session, we tend to limit the numbers a little bit more. So we'll be training 2 people at a time, for example, and that's far more focused. And I think people get a lot more out of it, which sounds strange. You get more out of a remote training session than you get out of an online training session or a face-to-face training session. But we've found that that's actually the case. And then obviously, if something goes wrong or something you don't understand, or you try to do something that doesn't work, you've always got access to us online. Whether it's, again, in a Zoom session, you got access to videos which explain all the various parts of the system, how-to videos, as well as some pretty detailed help, which has got screenshots embedded to explain exactly what you're doing, etc. So yeah, there's lots of ways to empower that side of IDU, and in terms of remote working, it really isn't an issue.
Well, that's it, folks. So for first of all, we want to thank everyone for joining the webinar today. It's been a pleasure, Kevin. Thank you very, very much, and looking forward to seeing your golf spreadsheets at some point in time.
Not really. You don't want to see them. But yeah.
Excellent. Thank you, Kevin.
Cool. Thanks very much.
Cheers.
Cheers.